morning to our viewers. Good morning, Pedro.
Good morning. Good morning.
Good morning to our viewers. Good morning to our listeners. I have to remind myself to say that
Yes.
because, our show is now on 10 different,
Yeah.
available on audio podcasts on 10 different channels, including Apple, podcast and
Mhm.
Google Podcasts, Amazon Music, and so many more. And so I have to keep saying our
Yeah.
audience, but
Yeah.
then
Yeah.
also our listeners because it's also available on audio. And I keep forgetting that.
Yes.
So welcome to everybody. We are so happy to have you here on Coffee Time with Marie Teresa CPA and my featured guest Pedro Gonzalez CPA. For those of you returning to our show, thank you so much for your support. We love having you here. For those of you who are new, give us a thumbs up or a hands up in the chat if you're watching us live. Of course, not want to happen on the audio side, but just give us a thumbs up so we know you are new. I also want to encourage everyone to make sure that you follow, like the channel that you are watching us or listening us on, so that you always know when a new episode is up and coming. Just a quick intro about myself. My name is Marie Terosian. I'm a certified public accountant and a global management accountant, an experienced auditor and CFO. I've created a methodology that I call Valuation MT, which I use specifically to help my clients that have reached their first million to get to their 10 million and more. I've also authored a couple of books. One of them is The Complete Guide to Business Growth, which is available on Kindle, and I'll have the link below. And there's an ebook available to you free, which is called A Business Owner's Guide to Operational Accounting. I also want to invite our audience and our listeners to join me on Clubhouse every Wednesday at 10 a.m. I'm going through this valuation MT process where each week I'm covering a section of the process, which has been very, very received very well by many of the Clubhouse attendees. They're telling me that they haven't received this kind of information on Clubhouse channels that at all, and it's such an important information that it's necessary for business owners to grow their business using financial information and structure that will really help them build their business predictably every step of the way. So, of course, I want to, welcome again my featured guest, Pedro Gonzalez. How are you doing today?
Well, doing very well, thank God. Every day is a blessing. With everything happening around us, every day is a great opportunity to continue our goal to grow individually and also with our business and helping our clients improve their businesses. So
Absolutely.
Pedro Gonzalez, CPA, your business and tax strategist. We're here to help our clients in at least in three areas that are critical to all businesses when it comes to the cash flow, helping our clients improve their cash flow, um, reduction of taxes, taxation, as we know, erodes your wealth, and exit strategies. We're all gonna exit. It just depends on how we're gonna exit. So, and especially in today's environment, when we're seeing not only inflation but the increase of taxation, that kind of combination, is putting a lot of stress in a lot of families and businesses. So we're here to help you in different fronts to be able then to help you achieve your financial goals. As mentioned before, we have the free ebook on real estate investors tax strategies. Again, well received. There's some great information in there for those that are interested in the venturing into that arena. Great opportunities for real estate, even in today's market. I believe in any situation that there is opportunity. So, but if you have the right tools, then you'll be able then to maximize your opportunities. Once you sign up, you also will receive 7 days of e-course, and then followed by a newsletter that will continue keeping you updated on tax matters that are surrounding the real estate industry.
That's awesome, awesome. I think that's excellent information that they're going to receive through your book and the e-course. And so, just to give a heads up and a reminder to those of you that are joining us in the past few episodes, which, by the way, we are now the 25th episode we are doing today, which is
Awesome.
massive. I mean, I didn't realize, but Pedro, when we were talking about this back in, I don't know, was it August, September of last year?
I know, yeah.
And we're like, oh, maybe we should, kind of record this. And then we
Yeah.
decided, well, no, we're gonna go all in. We're gonna put this out there. And I didn't even think how much of, how many episodes we'll be launching.
Yeah.
And so I'm so happy to say today is the 25th episode. And so just a reminder for everyone, in the past, we have covered a lot of great information, whether it's accounting, tax, or business strategy. We've talked about self-employment tax related issues, due dates. We've talked about partnership agreements, buy-sell agreements, valuations, bookkeeping. We've talked about entrepreneurial success mindset. We've talked about trimming down costs. That was last week, actually. We've talked about financial analysis and how important that is. And then today we're kind of returning back a little bit to the tax subject. And of course, Pedro, you are the subject matter expert in the tax area. So you wanted to kind of cover a little bit on the employee retention credit. So I know this is something very important to those businesses they got massively impacted by COVID during 2020. And this is available, and I'm just giving a general here.
Mhm.
This is available for business owners that actually retain their employees during these difficult times. They stayed open. And some of these businesses, just to put some industries out there, could be the daycares, could be the restaurants, could be the fitness industry, such as, let's say, a martial arts studio or a small fitness studio that really got affected, but they stuck around there long enough and they survived and still kept their employees during this time. So, Pedro, I'll let you take over the conversation and give us a little bit more. Let us know a little bit more about the employee retention credit and how these business owners would be able to qualify for the credit.
Yeah, the employee retention tax credit, as you mentioned, it's not a new credit. I mean, this actually was enacted back in 2020 as part of the CARES Act.
Mm-hmm.
What happens is that even as of today, there's still a lot of misunderstanding, confusion, and unfortunately, is actually being underutilized. You'll be surprised how many businesses are out there that are not even have applied for it due to again lack of understanding or knowledge or misinformation. So I thought that we talk about it and share with the audience and all the listeners that this credit is still available and you can take advantage of it. Now, who qualifies for the ERTC or the Employee Retention Tax Credit is going to be for the 2020 credits. Businesses must have experienced, in essence, a decline or I'm sorry, let's start. Basically, there's two qualifications. One either was you were business were either had a full or partial shutdown of operations during the year. That if you recall back in 2020, we had all these government mandates that
Yes.
basically limited the commerce, travel, or meetings and gatherings. So there was restrictions, even hours of operation, how many people could be, for example, in your restaurant or in your indoors. So there was a lot of restriction that affected revenues, and some people saw declines in that fashion. In addition to that, in general, you know what I mean. So the other qualification is. People, the businesses that saw a decline of more than 50% quarterly in declining in gross receipts when compared to 2019. Now, in 2021, the rules of the credits were expanded to include businesses that had either experienced the same, limitation due to the government mandates,
Mm-hmm.
but the gross receipt decline was reduced from the 50% to more than 20% quarterly decline of gross receipts when compared to 2019. So I wanted to again highlight is that the credit is available for both years, 2020 and 2021. Again, that was another part of confusion. Some people thought there was only 2020, but no, it's still available. It is available for 2020 and 2021. What happened is that they changed the condition of the decline in revenue for
Mm-hmm.
2021 to 20%, more than 20% per quarter compared to 2019. So the point of referencing here we're going to use is 2019. What else? As far as what wages qualify, we got to look as there's basically two categories of what we call the small employer, the large employers. The small employers are going to be those that have 100 FTEs, full-time equivalents, for 2020. That was increased to 500 for 2021. And again, keep in mind that there is 100 FTEs. It's not necessarily 100 bodies. You could have 200, but in FTEs, the full-time equivalencies, you might have 100 or less, because again, you might have a lot of part-timers. And so that
Absolutely.
was also causing some confusion. Some people thought they didn't qualify when in fact they did, because it's not 100 employees, it's 100 FTEs. And then for 2021 was increased to 500.
Mm.
So even those businesses that may not have qualified for 2020, they might qualify for 2021. So, so you can see why there was a lot of confusion there. Now, if you're not a small employer, then you become a large employer, and large employers are going to be then, I'm sorry, one more point with a small employer. Okay, so what wages qualify? If you're a small employer, then are those wages that were paid, wages paid to both working and non-working employees. And that's also important, because you might have had people that came to work and some others were restricted because, again, either limitations or whatever other reason, that were basically not working but still being paid. So if you're a small employer, you can include the wages for both. If you're a large employer, only the wages that were paid for those that were not working. Now, one thing that is also important to note, again, another point of confusion that were created due to again, remember that the coronavirus, the CARES Act, it was basically pushed through quickly. So there was a lot of revisions after. If you
Yes.
recall, there was a lot of even confusion when the PPP, and people were scrambling, trying to figure out who qualifies and who doesn't. Well, the same happened with the ERTC. At first, if you recall, the ERTC, you had to choose between the PPP or the ERTC. You could not have both initially. So what happened is that later they say, okay, so we basically make an amendment that says you can qualify for both. You can apply for the PPP and the ERTC. The only thing is that if you receive a forgiveness for the PPP, then you cannot count those wages. It's not that you cannot qualify, but you cannot count the wages that basically you benefited for the PPP. You cannot now, in essence, double dipping. You cannot use the same
Yes.
wages for which you received the benefit of the PPP. You cannot use those same wages for the ERTC.
But I can see how this can make it very complicated for a business owner to figure out. So is it the same full-time employee equivalents that we're looking at? I mean, I can see how this can be super confusing.
It is a confusion. This is why, again, it is important that you seek somebody that understands all of these intricacies, because you can either apply incorrectly and make a mistake and potentially receive the
Right.
credits, and you probably were not entitled to those credits, and then you might have to reimburse those credits. Or you probably don't even apply when you in fact could apply and receive dollars that you're entitled to, but you just simply you don't, because again of the lack of understanding. And it is complex.
Yes.
uh,
Absolutely.
it requires somebody to go in, and like you can see, the it's not just taking the how much wages you paid and then times X, and then this is my refund. Um, because you have to look as one is what they call qualified business, and again, the tax law is never written in English. I mean, what exactly is a qualified business?
They make it as complicated as possible.
And I didn't want to go through all of the details, but even when they
Right.
talk about gross receipts, you assume that is don't you cannot assume, because there's a specific definition for gross receipts. Just to give you a little hint, there was at one point initially the discussion of what about the forgiveness of the PPP. At first they were saying, well, that's gross receipts because you received it. But then they said, well, hey, listen, but this is unfair because it's not gross receipt from my operation. This was a gross receipt or receipt, those are funds that were in essence in the form of a grant. So then later they changed. They said, okay, so we're going to exclude the PPP forgiveness from the gross receipts. You know what I mean? So
Absolutely.
you cannot take go the bank statements and somebody doesn't know. They might say, well, sorry, Marie, you don't qualify because we look at the gross receipts and we see there's big deposits but
Right.
but it's not part of her operation. Marie didn't
Exactly.
earn those dollars. So you got to look at that, and you can see it. And again, when it looks at what is a qualified employee, you know what I mean? So employee, you figure, well, Marie, Jose, Carlos, and then Charlie, they're all my employees. Yes. But then what is exactly, if they worked, how much they earned, were they full-time or not full-time? You got to add up and then come up with the FTEs that will determine if you're a large or small employer. And there's other factors in here that determines the amount that you're going to receive for your credits. Um, Now, I know that the one that I get asked a lot is how much is
Yes. How much credit?
yeah, exactly. That's the key of all of this. I can we can spend a lot of time talking about the technicalities, but then how much is it worth? Well, it's actually it could be a substantial dollar amount for a small business, and this is why I want to voice this and make it aware, because it could be good dollars for a small business. For 2020, the credits is up to $5,000 per qualified employee. For 2021, it's up to $7,000 per employee per quarter. So, in summary, a qualified business could qualify up to $26,000 per qualified employees. So again, imagine just a small business. Let's assume just one qualified employee.
Sure.
You could potentially get up to 26,
Yeah.
exactly. And I say up to, so it's important to clarify. It's not a flat number. It's going to be based on the compensations, and so there's a formula, but it could be up to $26,000 per employee. So you figure you have imagine if you have 3 qualified employees, that is $78,000. That could add up. It could be a good chunk of change. And the other thing is that it is not a loan. I mean, there's like tax credits. And in this case, since you're applying, you can also wanted to emphasize that you still qualify as of today. You can still go back to 2020, 2021. So now, even though it's called a tax credit, it's going to actually be reimbursed to you, because in the past, during the 2020, 2021, what you could have done is applied against the taxes that you would have to pay.
Right. It's a deduction to the taxes owed. Right.
Correct. Exactly. That will be, in essence, the true tax credit. So now, it's in essence a refundable tax credit. Meaning that you're going to go back to 2020, 2021. You're going to do your calculation. And let's say, for example, let's assume 26,000. So to do your calculation, you say, hey, I qualify for $26,000. You have to amend and get those dollars back, and so you'll receive it in the form of a deposit.
Yeah, no, this is huge though. This is huge. 26,000 per qualified employee. That could be a really big chunk. I also wanted to point out something when you said earlier about how certain people would actually look at the gross receipts in a way where all these big chunks of let's say the loans coming in would be considered
Right.
part of the receipts. And I think this was the biggest thing at the time. And I know a lot of accountants were going out there saying, look, try to separate the funding coming in because
Right.
you don't want to mix it up with your regular sales operations.
Mhm.
And this was a big thing that we pushed out quite a lot. And those that didn't do it, yes, they would probably get confused and, oh, well, we don't really qualify, but you really have to remove that from the conversation
Correct.
and
Correct.
look at your actual numbers. Again,
Yeah.
it comes back to, whatever we do, and whether it's tax related, whether it's loan related, everything comes back to having proper record keeping,
Yeah.
to make sure the work is done correctly,
Mhm.
the records are clean, and all these calculations can be done properly, so that, the business owners can make the most out of the available, whether it's
Right.
tax credits or deductions available to them.
Correct. And during this time of the pandemic, one of the things that came clear is the importance of the accounting. Here, to be able to do this analysis, you have to have as a minimum quarterly numbers.
Yes.
So, for example, you have probably seen a small businesses that come in at the end of the year, and most of the accountants, and also in order to expedite the bookkeeping, or also because the client may not want to pay
Right.
for month to month accounting and reconciliation, which is the proper way to do it. But they say, no, you know what, Marie, here's the all of my 12 months of bank statements, here's all of my receipts, whatever. And but then I in essence, um, they don't want the month to month because Marie obviously will have to charge me X. So instead, Marie, no, you know what, just do a lump sum. Now you go to 2019, you cannot do the calculation. Now you have to call Marie. Marie, guess what? I need you to go back to 2019. I need you to break it out so we can do quarterly numbers
Exactly.
and come up with the proper determination if I qualify or not.
Right.
So, again, I know we have said it many times before, but is again the importance of good information in a situation like this. If you don't have the information, or the information is done incorrectly, it could basically disqualify you either by mistake, potentially, yeah, because it was not accounted properly.
Yeah, absolutely. And this is how, you on your end, you use this type of, correct data to be able to calculate properly the tax credits and deductions. On
Correct.
my end, I use it to make sure that, I'm helping the business owner scale their business, using the data that's there in a way where it's informative, right? So I can calculate a return on investment on certain things. I can calculate certain KPIs like we talked about in the financial analysis a couple of weeks ago. And it's always, good information in is going to be able to deliver good information out, and it's going to help us, help the business owner make the right decisions for the future.
Yeah.
So what would be, let's go over some of the industries. I know I mentioned very briefly some of the industries that were affected. Can we go over any other ones that you may have, what they should reach out to us to get this type of calculation done for them?
you know, uh, it's pretty much obviously you're gonna find the restaurants were the most affected. I mean
Yes, they
that's gonna
were.
be
Yeah,
one that's an easy one. If you have a restaurant, and it's like, again, the restaurant is not a it has to be a full fledged restaurant with a brick and mortar. It could be the stand at a mall or something like that. You know what I mean? So it doesn't have
yeah,
to be. Okay,
yeah.
so you keep in mind that that type of industry was also heavily affected. But you're also going to have even the small retail store. You know what I mean? That was also affected because they could not
Sure.
operate full time. You're going to have any kind of I would say anything surrounding around children. For example, daycares, summer camps. You mentioned the karate, any kind of activity, a gym
Small
activities. Either
fitness.
be
Yeah,
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 exactly.
yeah.
Either be fitness. It could be your where you used to go and take your classes for MMA.
Right.
It's just stuff like boxing. Those centers like that, sports centers, were also affected. You're gonna have, you'll be surprised, including some medical facilities, even though even though they were called, some of them were called essential, some like dental, even the hair salons. You will be surprised how many of those enterprises were heavily affected because
Right.
even though they were uh, open for operation, they have to go through an extensive amount of restructuring to either the number of people they could have at any one point of time waiting in the waiting
Right.
area. So that affected the scheduling, how many people I can have, because I cannot
True.
have so many people in the waiting room. So, dental, you see,
Yes.
actually, a lot of dentists that were affected by this, chiropractors that were affected by, massage salons that were affected by it. You know what I mean? So you'll be surprised at the number of industry that were
True.
affected by it.
Yeah. And let me ask a more of a clarifying question, because I'm thinking maybe some of our business owners that are listening that might have it in their mind. So as we're thinking about full-time equivalents, right? So what if a business owner only has contractors, like 1099 contractors? Would they qualify?
No, no, it has to be wages paid. So it has to be
Wages.
employees. Yes,
Okay.
that's a good, also another good point to bring up. Yeah, it has to be wages paid. This is specifically because it's related to the retention of employees. So it goes back to the clear definition versus that's one thing is very clear, and it has to be wages. It has to be employees. They have to qualify as employees. Um, so yeah, the answer to that one would be no. If it's all, you have to either if you operate 100% on contractors, you will not qualify. If you have a combination, then you have to exclude the contractors and do the calculation on the W-2 employees.
Awesome. And I want to bring up another question too, because again, I'm thinking maybe some of our viewers or listeners might have this. What about the nonprofits? Would they qualify if they stuck around
Yes.
and they still had people? I mean, technically, they don't file. They don't pay taxes, but they still have to file their tax returns. Do they qualify for this credit?
Yeah, surprisingly, the nonprofits do qualify because they are subject to payroll taxes. They're
Okay.
not, they don't have income tax, but they are subject to payroll taxes. So yes, nonprofits, churches will be also qualified. Yeah. And again,
Awesome.
as long as they have employees, uh,
Yes. Yes.
that's going to be again the same qualification. But yes, nonprofits also will qualify.
This is awesome. This is awesome. I think this is a lot of I mean, great opportunity for our business owners to take advantage of, and make sure to reach out to us for assistance. I'm putting down there my link tree. You can also, I'm going to also put down there in the chat. You can also email us at admin@marietarosiancpa.com. If you like assistance, and we will get you in touch with Pedro directly, and make sure we'll help you through
Yes.
the process and make sure you qualify or not. But we've already covered many of the qualification opportunities. So if you see that some of these are applicable to you, don't wait. This is a great opportunity to go back and take a look at not only 2021, but like 2020 as well. This would be a great way to make sure that you take advantage of it. So,
Mhm.
any other thoughts, Pedro? I know we're coming
Well,
close to the 30-minute
yeah,
mark.
yeah. I would
Our
just
business owners are
like,
very, very busy.
yeah. So just a final, comment on this is that while the ERTC what is not applicable for the fourth quarter, this is another thing that caused some confusion. The program has not ended. What they did is that they stopped the period of coverage until the third quarter 2021. So they excluded, because initially they said until December 31st, 2021. So they changed it and then they excluded the fourth quarter. But the program is not ended yet. You know what I mean? So the program is still active. You can still, if you have not done it, you still have time. My word of caution here is do not wait, because we don't know at any moment they can actually close it.
True.
So my word of encouragement to you is to take action. If you think you can qualify, even if you have doubts, you really just reach out. Hey, I have not applied. What could I qualify? And just reach out.
Yeah.
Marie put the contact information, and we'll do a calculation, let you know if you do qualify.
Absolutely, absolutely. That's very good advice. With tax rules. They can take anything down whenever they want,
Yeah,
so
yeah.
you may not qualify, if you wait too long. Don't wait, and make sure to take action. And now that we're at the 30 minute mark, so I'll close the today's session with our usual quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. And I hope that both of us are 2 of the 5 people that you're spending your time with. With that, I wish everybody a wonderful rest of your week, and see you next week.
Great. Wonderful. Take care.